that waterfall decline in stocks also was almost a complete reset in positioning and sentiment. Investors were forced to liquidate when the VIX hit 60. We know a lot of institutions didn't add risk back as the market rallied. So I think the pullbacks are going to be pretty shallow because investors just are underinvested at the moment. And then when you look at sentiment, it's barely turning neutral now. So if investors have been fighting this rally, as they become more neutral or more optimistic, that's upside for stocks.
Tom Lee kicks things off by rewinding to February. Markets were riding all-time highs. But the outlook, cloudy at best, uncertainty was everywhere. Tariffs, Fed policy, slowing growth, rising inflation and global tensions. But fast forward to now, and the picture is starting to clear. Lee points to growing clarity as we look toward 2026, with several powerful catalysts on the horizon: potential deregulation, expected tax cuts, and a Federal Reserve that may soon pivot from its pause to rate cuts. These shifts could act as major tailwinds for stocks, especially given how impressively corporate America has held strong under pressure. If you're finding this insight valuable, make sure to like this video and subscribe, and don't forget to turn on notifications so you never miss an update. We're diving deep into markets, crypto, and digital assets every week. Got thoughts? Drop your take in the comments. We read every single one. Your support boosts this channel and helps us bring you even more high-quality content. Thanks for watching. Let's dive in.
When we go back to February, when the market was at all-time highs, we have to keep in mind we had a lot of uncertainties ahead of us, and we weren't necessarily looking at 2026. The tariff visibility is much better today than it was 3 months ago. And when we look at 2026, I think that there are things to look forward to, such as deregulation, tax cuts, and actually a Fed that's on hold now, but probably doing more cuts now in 2026. And then from a company perspective, companies survived, I think, a black swan event. That waterfall decline in equities and the sort of the near heart attack of the economy was an environment where companies produced earnings that beat expectations. So this is the fifth stress test for businesses. When I put all that together, I think PE's probably going to be higher in 6 months than lower. And when you think about 2026 earnings having upside, I think there's still upside for stocks.
So, because you keep talking about 26, you're not writing off the rest of this year. We still have 7 months to go.
Yeah, we have a lot of history to make between now and year end. But keep in mind that waterfall decline in stocks also was almost a complete reset in positioning and sentiment. Investors were forced to liquidate when the VIX hit 60. We know a lot of institutions didn't add risk back as the market rallied. So I think the pullbacks are going to be pretty shallow because investors just are underinvested at the moment. And then when you look at sentiment, it's barely turning neutral now. So if investors have been fighting this rally, as they become more neutral or more optimistic, that's upside for stocks.
Professor Jeremy Siegel, like you, has grown more bullish, pointing out, in his words, the Trump pivot on the tariffs, but he still acknowledges the fact that the tariffs are likely to remain in place. Whether it's 30 on China and 10 on everybody else, that's still somewhat regressive, is it not?
Yeah, well, we are now in a new world of tariffs, and businesses are adjusting. I think one of the things that we're seeing is that the market is now in a position where they can start to look through some of the messy adjustments, right? We know there's been a disruption to the supply chain. I think stocks can look through that. But you're right, Scott, there is now this world where there's essentially a consumption tax in place on things that we're importing. But that doesn't mean we have to actually have the PE decline or the markets to fall. It's now just something we have to kind of manage through.
What about yields rising? How much of an issue potentially is that?
Well, I think Fed Chair Powell made a good point that long-term yields could be rising because of inflation volatility rather than inflation expectations going up. That's actually an opportunity for markets because if inflation volatility delivered is less than expected, then we could expect yields to come down in the future.
Yeah, but what about, I feel like the bulls are finding convenient excuses for why the rates on the longer end are going up. What if it simply, Tom, is the fact, and I don't mean to single you out, the professor in his answer to the question too put more credence in the fact that, well, maybe it's because growth is going to be better, not so much the deficit. However, what if finally the bond market is saying enough is enough and it's time to get real? And if you all don't, we will.
Yeah, Scott, there was a moment like that a few years ago when, when an auction went badly and many people declared this was sort of the end of the ability for the U.S. government to finance, and people panicked and the VIX surged. But even in that moment, it proved to be a buying opportunity for equities. So I think if there is a moment where maybe the bond market sort of has a tantrum about that, and I'm not saying it's going to happen, but if it does, I think we have to remember the U.S. is a huge economy. There is still a lot of trust in the U.S. And I think those who've called for the end of U.S. exceptionalism, I think that's been the premature call. And if none of those is true, the bond market and investors can handle even a 4.5-4.7% 10-year.
On the political front, Mike Novogratz doesn't mince words. He slams the Biden administration's approach to crypto, calling the last 4 years un-American for the industry. But the tide may finally be turning. A bipartisan bill, spearheaded by Senators Warner and Gallego, is gaining traction and could soon pass, introducing long-overdue structure and legitimacy to the crypto space. Novogratz also weighs in on the Trump family's growing involvement in crypto. Controversial, sure, but illegal? Not necessarily. His message to lawmakers is clear: don't let political grudges derail innovation. Crypto must stay bipartisan if the U.S. wants to lead. Let's keep the conversation going.
I think we pivoted. Listen, there's an emotional connection. These are the two most exciting, kind of growth areas in markets, right? AI and the infrastructure needed for AI to exist, and crypto finally at the brink. Right, we're going to get a bill done on Monday. Finally, at the brink of institutional adoption.
Right,
and we have built our company for this moment, and so I couldn't be more excited.
At the risk of maybe upsetting your regulators, given maybe some of your politics, I'm curious what you make. We had a piece earlier about the Trump family. Eric Trump was asked about what's going on with their engagement in the world of crypto. What do you think of that, and how you think it affects either the public's perception and credibility of crypto right now, or any of the other sort of bigger questions that it raises?
Yeah, so the 4 years under Biden were really un-American when it came to crypto. It was just misery. And this administration has been amazing for the space in general. The Elizabeth Warren faction of the Democrats are looking at the Trump participation and using that as a wedge to say, doesn't feel good, it doesn't feel right. What I'm proud about is that the core of the Democrats, Senator Warner, Senator Gallego, is really leading this genius bill, amongst others, have said crypto should be bipartisan. And if the Trump kids do something illegal, they should get prosecuted. We haven't seen them doing anything illegal yet, and I hope they don't. But let's not let their participation sidetrack this entire issue. Partly it's political, right? One of the reasons the Republicans did so well was crypto. They were the biggest funders of Trump. They highlighted this anti-innovation side that was the Democrats were being painted with. I used to say there are more crypto owners than dog owners. And so why are you the party against dogs? And I think the smart Democrats get it. And so we got to get this bill done, which I think happens Monday. Then there's a market structure bill. And then, quite frankly, crypto will go quiet in D.C.
Okay. What will crypto do in terms of the market? Will it go quiet or go loud? At this point, we're looking at Bitcoin sitting at about 104,000.
And I remember, by the way, when we started to come back off the April lows, and maybe gold had the first move. And you said, when gold goes, what was the exact data point? It was like crypto follows. And, sure enough, here we are.
Yeah, listen, we had a euphoric top right around the inauguration, and, a combination of a lot of things, Trump coin and whatnot. People say, okay, and crypto went back and tested where the election breakout was. Now it looks like we'll take out 106, 107, 108 and make the next leg to 130, 150. And at that point, you're in price discovery, right? I keep thinking gold's a $22 trillion asset and crypto's a $2 trillion asset. And at one point, as more and more young people inherit the money for their old people that, kiss the face of God, you're going to see crypto equal gold. And that's a long way from here. But listen, we started off wanting to be the Goldman Sachs of crypto. And so we started off building a broker dealer and an asset manager, right? A sales and trading business where we would sit between institutions and the crypto market and try to be the bridge really between crypto and this big institutional world. I used to say the herd is coming, right? The institutions are coming. I was way early. but the herd is finally here.
Did anyone try to talk you out of it, by the way?
Oh, everybody. I mean, listen, early on, I bought my first Bitcoin at 100, and it was kind of a quirky. But as you try to sell to people, they just didn't get it. And, slowly but surely, people got orange pilled, first on Bitcoin and then on the whole idea of this decentralized revolution, on what crypto could do. I really think it was Larry Fink that was the pinnacle, that once Larry bought in, ever since then, like, expansion of adoption is rolling downhill. And I think it's now like a snowball that's just going to keep picking up steam. The other part of this was I wanted to surround myself with young people that were really smart, that were creative. I wanted to learn new things, and I wanted to have a group that would be able to pivot. And so now Galaxy really has two businesses. We have pivoted not from just crypto to crypto and AI data center. And
that would be like Goldman saying we also do an AI data center.
Well, that's what I wanted to ask you about, because it's like there's it would be like Goldman meets AWS.
Yeah.
Well, Jeff Bezos pulled off books to the cloud, and I'm not saying I'm a Jeff Bezos, but
right.
What was interesting about Bitcoin mining, we'd gotten into Bitcoin mining, and we happened to buy an amazing site in Texas. When the AI need for big power came up, the guys that owned lots of the big power were crypto miners.
Right.
And so we turn out to have one of the best sites. It's called Helios. And we've signed a lease with CoreWeave. We have an option on another big lease with CoreWeave. That's close to $14 billion of rent.
Wow.
Over the next 15 years.
So, okay, but for the investors, though, who are saying to themselves, okay, the valuation of this company should be a blended comp between a Coinbase on one side, I'm making this up, and one of these big REITs that are doing AI data centers?
We are a data center company plus a crypto company. So yes, listen, our data center company will be, our first cash flow should happen first quarter next year. And so by mid next year, we should have the first section really flowing a whole bunch of cash. And that point, I think the market will give us a lot of credit for saying, whoa, this is a big opportunity.
Do you think it's a hedge, or do you think that they actually are totally connected?
Finally, Novogratz breaks down the current market dynamics, and he's got his eye on a major move. Bitcoin may have pulled back from euphoric highs, but it's showing signs of strength. The key resistance zone, $106,000 to $108,000. If that breaks, we could enter full-blown price discovery, with upside targets of $131,000 to $150,000. But he's thinking even bigger as generational wealth transfers accelerate. Novogratz believes digital assets will surpass traditional investments, with crypto's total market cap potentially challenging gold's $22 trillion footprint. If you're serious about understanding where crypto is headed, make sure to like, subscribe, and hit that notification bell so you never miss a key market update. Got thoughts on Bitcoin's next move? Drop your predictions in the comments. We want to hear from you. And don't stop here. Check out our other videos on crypto trends, digital assets, and in-depth market analysis. There's a lot more coming, and you won't want to miss it. Your support helps grow this community, and we're just getting started. See you on next one.